Welcome to the New Flat Rate podcast. We started out as a contracting family, and now we help other contractors. So I have to confess, I went through our training lab and found a video that is just a complete gem from 2017. It's a webinar about how to do accounting for struggling contractors by Rodney Koop, the founder of the New Flat Rate, who happens to be my dad. If you have it all together, this episode probably isn't for you. But if you're a struggling contractor like Rodney was, I think you are going to absolutely love this episode. So enjoy.
Going into business, the extent of my business knowledge was having worked for a big company and saw that they had their act together. After I was in business for about a year, I thought I knew everything. I was a big electrical contractor, I thought. And so I called the lady that worked for the big company that I came from. Because at the big company, we got these reports, these detailed reports on all of our big electrical projects. So I called her and I asked what software they used. Well, it was Peachtree software, kind of like QuickBooks, but harder. And I said, well, if I buy that software, can you show me how to set it up that way? She says, Rodney, you were just a typical project manager. I said, why? She said, you thought those reports magically appeared, didn't you? I figure you push a button, right? You push a button, you get the report. How hard can it be, right? Well, anyway, she said, Rodney, you don't have any idea how much work it was to give you those reports every week. Well, she was right. Of course, I didn't have any idea. And so I do now. And I realize that, let's see, I've been in business since 1990. I've never once had a report like that. But my accounting experience before that was a lot like you. I took a class on accounting in high school. Pretty worthless class because I'm not an accountant, see. So I'm going to show you something today. Some of you might know this, but boy, oh boy, does it ever change the game. So let's talk about it. When it comes to accounting, what is it that we really need? What is it that we really want? We want more money and less debt. So people say, oh, I know, you just have to work harder and spend less, right? That doesn't always work in contracting. So do we want debt? Here's what we've been told. Well, I know my prices, and my customer has to pay for everything. So if I'm not making enough money, what do? I go through and I calculate my billable hour again. I raise my prices or whatever, because we have to get the customer to pay for it. Well, the problem with that is if I go buy a Rolls Royce for $280,000 and think I can just raise my billable hour, not only is that not fair to the customer, the marketplace will shut me down. In other words, they won't pay the price. My price will be too high for the market. Well, we already know that when you're using the new flat rate, that's not an issue. So you're probably saying, why are you talking about that, Rodney? Well, all right, let's move on. Here's our typical accounting strategy. Materials, labor, other costs, overhead, plus profit equal our selling price, right? Now, if you use a billable hour calculator, including the one that we might have sent you, basically it kind of puts something together like that. Obviously, the new flat rate goes out and finds the profit for you from the customer. But the problem with this is this keeps entrepreneurs in debt. Now, there's a difference between being an entrepreneur and a businessman. An entrepreneur sees an opportunity, becomes very talented and skilled, and goes out and sells his product or services over and over. Doesn't pay a lot of attention to the accounting side because that's not his thing. Hey, if there's money in the bank, that's great. If there's not money in the bank, well, we better go out and sell something else. All right. My problem was this. I would go to meetings. I would rub shoulders with other contractors who all seemed to be doing so well. Sometimes I was too. Certain times of the year, or when I'd made some really nice sales, I was doing great as well. But the problem is, I was setting my price based on what I thought I should do. I mean, for example, profit. How much profit? What number do you put there? 10%, 20%? I mean, what number do you put there, right? And how about these other things? Retained earnings, owner's compensation, profit. What's profit? What's mine? Let me go back there. When is enough enough, right? And here's the kicker. When it's IRS time, when we're sitting down at the end of the year doing our taxes, is that the time to look and see where the money is? Or is that the time that in the past we've looked and we've said, where did the money go? Where the heck is all the money, right? So let me clean my glasses here. This is high-tech stuff. I got to be able to see it, right? Now, with the new flat rate, I know you're thinking, why is Rodney talking about this? We're using the new flat rate. We have more money than we ever have. And a lot of you do. And I want you to know not only am I proud of you, your family's proud of you. I promise you that. One of our members told me earlier today, he said, Rodney, maybe you could tell me what to do. He says, I've got 4 kids at home. We're about to get our 5th. We're adopting a child. He says, how did you do it with 9? Well, it was easy for me. My wife did it, right? Let's have a happy family. But one of the things I told him, I said, you got to make more money. Why? So you can hire help for your wife. I have somebody that comes over to my house once a week and cleans out my shop. Isn't that great? My wife just took her away from me. Now my wife wants to use her in the house. So who's gonna shine my 4-wheelers for me, right? Who's gonna put my tools away? All of them in the right slots. My gosh, anyway, your family needs help. Get them some help. Let's move along here. Accounting. Let's make it simple. Now, so let's do a change here. Let me get past it. The accounting method. Look at this. Here's standard accounting principles. We set the price by knowing our costs, right? So, as I said, we take our expenses, we add them up, our overhead, our profit, and that's how we set our selling price. With the new flat rate, that's how you set the Band-Aid prices, right? And then the new flat rate goes up from there. This is called GAAP, Generally Accepted Accounting Practices. You can find out about it at any university and even some of the better high schools. All right? But who does it work for? Well, it works for wholesalers because they actually know what their costs are and they budget like we're going to sell $1.1 million this year. How many of you have done that and then you only sold $750,000 that year? Okay, let me move on. All right. A generally accepted accounting practice is you still have to account for profit. What number should that be? As we know, the construction industry for like the last 50 years is typically known to earn 2 to 7% net pre-tax profit. Many of you were in businesses that didn't make that. Some of you were in businesses that made more. What the heck is the number? If all I could do is put a number there and then put my price on the book and sell it, well, then why not put 30%, 40, 50, 60? Why not put 100%? If I do $1 million this year, I want it all to go in my bank account. Okay, so there's an extreme there, I guess. All right, using standard accounting to pay bills. Gross sales for the week, $10,000. Payroll for the week, $3,850. Material, equipment, gas, oil, lunches. Maybe we picked up a new filing cabinet and a new tire on the truck. You know how it is. What do we have to buy this week, right? So we wrote checks for $5,455 this week. So what's left? $695. So there's the problem. Our profit this week was 7%. Is that even 7%? That's not 7%, is it? Let me see. You know how it is with numbers. You can be good with numbers, right? 10,000 times 0.07. Yeah, that's about right. That's about 7%. You can be good with numbers, but you're busy doing a webinar or something. Doesn't hurt to hit the adding machine. Well, now there's 7%, but I thought we were going to make 20% or 10 or 15. So do we just make do with what comes in? Excuse me. I mean, think about it. After all, you had a profit in mind, a profit number. Now, what was that number? Think about it. Take a minute and think about it. Was it 10%, 15, 20? those of you that set up your accounting and your billable hour, I mean, what the heck was that number? Sometimes I just have to look and see if anybody's still listening to me. Oh, yeah. Watch. You're going to love this. So my number, I know it wasn't 7%, okay? But don't worry, by the end of the year, when I sit down with the IRS man, I'll have a hard time finding that 7% usually. So let's move ahead. Let's see. I think my PowerPoint screwed up because my computer crashed a couple times. Now, yeah, it did. That's okay. So here's the table set by accountants, okay? The accountant says both plates are the same. Everything is the same. Now, by the way, if you're trying to diet, here's how an accountant goes on a diet. He always uses the same size plate, but he puts less food on it. That's fine for an accountant, but it does not work for entrepreneurs because we'll put less food on it and then we'll put less food on it again and again and again, right? So the only way to lose weight is with an entrepreneurial plate. So for entrepreneurs and people that really want to lose weight, you have to use a smaller plate, see? Because we like to fill up the plate and then some. And so, by the way, here's good advice for those of you that might want to lose weight. You have to start with a smaller plate. We've been taught to clean the plate, to use everything that's on it. Step one, get a smaller plate. So here's how we're going to do it in accounting, right? Change your accounting this way. Sales price minus profit equals expenses. You see? Instead of the other way around, we're going to start at sales, we're going to subtract profit, and then expenses are left. Now, expenses, remember, that's materials, equipment, labor, overhead, and overhead. That's your expenses. So sales minus profit equals expenses. So the only way you can pay for bills is through the expenses. Remember, the expenses had the material and the labor and the equipment in them. They had the overhead. If you had to buy a new file cabinet last week, if you had to buy a new tire, why wouldn't it have come out of expenses? Because you budgeted for that at the beginning of you were planning to have to spend money. So last week when you went to spend it, something went wrong. Watch how we change it.
If you want freedom in your business, you should check out Freedom Builders University. It is an amazing coaching program for service companies like your own. Check out myfbu.com.
Here's how we change it. Okay. This is called the profit grab accounting, okay? Maybe they'll let me teach it in high school. Gross sales for the week, let's say it was $10,000. Now let's do what we have to do, our profit grab. Okay, let's just say that you wanted to make 20% in your business, which, by the way, is a nice amount for you and your family, and so that your business is sound and whatever. This is the profit grab. The $2,000 leaves the company, leaves the checkbook. Bam, it goes into the vault. It goes into the bank. Okay? Or in my case, it goes to my wife, who tells me that we should have a joint checking account. Well, we don't have that yet, but the profit goes to her. Now, what's the new balance? $8,000. So now at the end of the week, instead of thinking I have $10,000, I only have $8,000. So first of all, I'm going to take out the payroll. It's still $3,850. Then I'm going to take out all that other stuff. Materials, equipment, gas, oil, lunches, the new file cabinet, the new tire, etc. That's $5,455. And now the real gross profit this week is a negative $1,305. Look, I went from thinking I had a 7.7% profit to having a 13% loss. Can you imagine that? Now, fortunately for me, in my early days, my bank automatically overdrew my account. So I would probably have 10 or 15 overdrafts there. Back then, they were only like $12 a piece. So my loss would have been bigger, wouldn't it? Because I would have went into an overdraft account. Now, isn't this, how many of you has this happened to? You say, well, what choice do I have? I've got to pay my expenses, don't I? I mean, if this happens, well, how are we going to handle it? I just lost 13%. Is that a good thing or a bad thing? Keep in mind, I'm now up $2,000 in my profit account. And maybe I never had that before. See what I mean? Bam. So yeah, I'm overdrawn. I'm writing checks that are no good. That's a bad thing. But look, I took the profit out. You might say, well, there wasn't any profit there. Yes, there was. You darn right there was, because I'm in business for a reason, and that's to make a profit. If I sell $10,000, $2,000 of that is profit, I'm taking it. You say you got to pay your bills. Yeah, but you don't have to pay them all today. Some of you have done that. So by the way, let's just go back there and take a look. That $5,400, it's true, isn't it? Something in there is not getting paid. Okay, I've got to pay for the material or put it on a credit card. Oh, what happens? We start using more credit cards. I'm going to show you how to deal with that. I had to buy the equipment, had to put gas and oil in the trucks. Lunches, I didn't have to do that. I could have carried my lunch, right? That new file cabinet could have waited. Okay, I could have just used a cardboard box for a while. And a new tire on the truck, I kind of had to buy that, okay? But the file cabinet, the lunches, and I could have put some of the material and equipment on a credit card. In other words, I'm going to get by, right? But I need to know that I just lost 13% of my gross. I need to know that. Now, the good news, I'm $2,000 up in my profit account. The good news, hey, I'm still running 20% profit. That's a good thing. Well, we're going to have to reconcile someday, aren't we? Now, look at this. To stay out of debt and actually make a profit, we have to do this. You don't borrow from profit. See, it's gone. You have to get it out of the general account. If you don't stick it in the vault, you're going to borrow from it, and that's a bad thing. All right? Here, look, I love this statement. You're in business to make a profit, right? You said you are. You've told everybody you are. You go to the meetings and tell everyone we're in the business. Well, if that's the case, anytime you borrow or take or steal from profit, you're actually destroying your business. You're destroying it, because business is to make a profit. If you're not making a profit, you're not in business. You're destroying it. Let's take this one step at a time. And unfortunately, my graphic starts with step 4, but I don't think that's such a big thing. Take the profit off at the top. Scary, huh? Scary thing to do right off the bat, isn't it? Bam, take it. Kind of a fun thing. Hey, you can do that this week. At the end of the week, look at your gross sales. Take the profit. 10%, 15, 20, whatever it is. I mean, if you're telling people, yeah, I make 25%, all right, take it. Take it out. Get it out of the company. Live on the balance. You say, Rodney, I can't do that. Maybe not this week. But buck up. Get ready. All right. When do we pay expenses? You say, Rodney, there's no money left. I took what you called profit. Well, yeah. If you didn't take it, then you didn't. Who are you kidding? You didn't have any profit. So take the darn profit. Take it. Move it. Get it out. Okay. So when do we pay the expenses? Okay. At the time of purchase. There was a time in my business when I was in trouble financially. Imagine that, with all of my accounting acuity that you can see. And Carrier was nice enough to put me on a cash basis. So whenever we bought equipment, we paid cash for it. All right, good. That kept me out of a lot more trouble. So at the time of purchase, you're going to pay with cash, check, or credit card, right? Or you may have an account where they send you a bill. But when should you pay for that? You know, if you wait 30 days, 45 days, all of a sudden, what are you doing? You're going to have to steal the profit to pay it. So let's not do that. Let's reconcile our accounting, our bills and our credit cards, whatever charges we have, let's reconcile them twice a month. Pick 2 days, maybe the 1st and the 10th, 1st and the 15th. But 2 times a month, you sit down and you look at, okay, what are my bills? Yes, I'm not going to get my credit card statement till the end of the month. But how many of you even use that anymore? A lot of you are probably like me. Uh, well, I'm not necessarily a good example. I don't open envelopes. So when I want to pay my credit card, what do? I go online. So you just go online and you look at what you owe. Credit card, oh look, I charged $750. Guess what? That gets paid today. Okay? What else? I've got a bill here from carrier. I've got a bill here from somebody else. Bam, it gets paid today. You say, Rodney, what if I can't pay it all? You pay what you can. You pay what you can, because everything in the checking account is now there for expenses, right? Because you took the profit out. So everything there can be paid. So we have to look at it and say, what day of the month is it? Because payroll is coming up on Friday, so we always have to leave enough in there for payroll. Otherwise, those loving people that give you a nice card for Christmas, they won't stay around if you don't pay them. Got to have payroll, right? Okay, and then we pay out the rest of the expenses to pay down all the bills. Do that twice a month. What does it do? It actually promotes a sound fiscal habit. You know that you're going to sit now. When you know that next Monday I'm going to sit down and pay the bills, you're not going to go out and take that expense money, which is designated for expense, and you're not going to go spend it on something that is not, that you don't have to have right now. Some of you are like me. If you need it once, rent it. If you need it twice, buy it, right? The problem is, if you rent a backhoe, and then the next time you rent it, you just can't stand renting, so you go ahead and buy it on a 5-year lease, that may not be in your budget. See what I mean? Sometimes it's better to waste money on things like rent, things like paying quarterly taxes and things. Sometimes it's better to waste money. It seems like a waste than it is to do what seems so right to contractors. Twice a month, reconcile. Promotes a habit. It promotes accountability. All right? How to reconcile. Pay the bills and credit card purchases. You don't have to pay the whole credit card. You don't have to pay the whole bill. But take your expense money, write it out. You see, I don't know about you, I like to have money in an account. It gives me a sense of security that for many years I didn't have. Now, my daughter Danielle, that runs the company, she would rather have the bills paid and not a dime. She loves things paid for. That's the only reason that I can afford to talk to you now on a very nice laptop, because she takes care of us financially, because she's not afraid to take money and spend it to pay down expenses. This becomes very, very important. If you can only pay half a bill, pay it. You know the vendor will be plenty happy to get half of it. Credit cards, go in and pay what you can. You don't have to wait till the end of 30 days. You know that. It's going to be $10,000 at the end of the month. We'll pay them $2,000 now. It'll make a difference. What if there's not enough money? Well, as I've said before, if there's not enough money, you have to prioritize somewhat. You've got to keep the payroll there, but remember, you can only do what you can do. But if there's not enough money, what does it do? It tells you right now something's wrong. I've got a business. I thought I was making money, but I didn't make any this month or last week. Why? Maybe we were just sitting around looking at the phone like this. Oh my gosh, I wish the phone would ring. That's not how you do business, is it? You do business, you make the phone ring. You make it ring. How do you do that? Well, is there a nice way to say get up off your butt? In other words, you have to do something. You might actually have to do something to make it ring. But if you're desperate, what do? You just get a whole list of every customer you've ever worked for, and you just start calling them. And you say, I don't know what to say. Well, then you call them and say, hey, this is Rodney. I'm your heating and air guy, and I just wondered if I could borrow a cup of sugar. You say that's stupid. It's a whole lot better than just sitting there waiting the phone ring. If you called your entire client base and asked for a cup of sugar, first of all, you'd never have to buy sugar again. Now, that's a good thing. Second of all, somebody would say, hey, while you're here, my air conditioner's been smelling or something else has happened. Okay. You make contact with your customers. They'll remember you. And when you go get the sugar, what do? Bring them a couple of magnets, a couple of cards, and talk to them a little bit. Now, obviously, there's a lot of stuff you can do above asking to borrow some sugar, isn't there? But the point is, because we took the profit and stuck it in a vault, and because we ran out of expense money, that's how we knew we had a problem. Otherwise, we get to the end of the year and we sit down with our accountant and he says, oh, wow, well, you did pretty well this year. You made 11%. And you say, where is it? He says, well, here it is on your financial. Where is it? My bank account's $20,000 overdrawn. Oh, he'll say, oh, we'll see. Cash and profit, they're two different things. Do you see why I'm not an accountant? Who could stand that kind of thinking? Cash and accounting are two different things. Cash and profit. Well, if I made so much money, where is it? Well, you spent it. You spent it on what may have been a legitimate expense, but you didn't have enough business coming in to do that. So you ran out of cash. By using this method, oh, you don't all have to do this, by the way. Those of you that are businessmen who are accountants, you're thinking Rodney's crazy. He's an idiot. Besides that, he's stupid. Well, yeah, I'm just not an accountant, see? That's not me. So I have to have a system. So those of you that are accountants, this isn't for you. But the rest of you, and you know who you are, you've got to spend expense money to force yourself to see the real business. Let's not go 20 years down the road and be broke and say, oh my gosh, why did I do that for 20 years? I would have been better off working as a teller at the bank. That's right. So learn to spend expenses. It costs you nothing. Did you know when you sit down and write a check out of your expense account to pay a legitimate expense, it costs you nothing. When we say this, the customer pays for everything. If we have to raise our prices and charge it to the customer, it's okay because the customer pays for everything. That's right. So it's not even your money. You're writing payroll. Hey, payroll was $3,500. Hooray. It wasn't my money. I don't mind writing a check. Oh, I got to pay carrier. I got to pay the utility. It's not even my money, you see. And then somebody says, hey, we're a little short this week. Could we take something out of the profit vault and use it? Hold on. Don't touch my money. You see what I mean? If we separate profit from expenses, we don't mind paying the credit card early. And of course you save money then, don't you? Pay those expenses early. You said, gee, we got extra money in our expense account. Pay your utility bill 3 months ahead. All right? If you use a payroll company, you can pay your payroll a couple of weeks ahead. You can, but it's not your money. Just write it out and pay those expenses. But the profit, don't touch my money. Don't touch my money. And if it doesn't work, if you can't reconcile, if there's not enough money in the expense account, oh, what is that? It's a great big sign. It's a red flag. What is it saying? I'm not doing enough business. Now, if you're in the heating and air business and you say, well, we're only busy 7 or 6 or 8 or 9 months out of the year, well, that's fine. Don't try to stretch a 9-month-a-year business. Don't try to make it a 12-month-a-year business. You need a 3-month-a-year business to go with it, see? You put the two together, you have a 12-month-a-year business, and wow, we can write the expenses and put the profit in the bank, and we can retire young. Well, what's a 3-month-a-year business? Well, think of something, right? Maybe you sell ice cream sandwiches on the street for 3 months. But if you're in business, you have to be moving materials, goods, and services in exchange for money, and you have to be doing it 12 months out of the year. Well, here's the good thing right here. God gave you this amazing brain, and now he's expecting a return on it. So I like the 3-month businesses. I like water conditioning, water filtration, water purification. I love that. If I'm a heating and air contractor, then I might sell water heaters. Now, you plumbers, you say, that's not fair. That's our business. No, you can do duct tightening. You can do crawl space renovations, basement waterproofing. You imagine what you can do. But if you need a three-month business, you find one, okay? Maybe you deliver water. I don't know. Well, I do know because I know probably 20 or 30 3-month businesses, but that's what you need, see? So step one, do a profit grab and start this week. Take the profit, move it, and then start writing out the free money. Start paying your bills twice a month out of the expense account, the free money account. And by the way, you're not going to be so fast to dwindle that account, are you? You're looking at that motorcycle, which everybody should have. Snowmobile, if you're above Mason-Dixon, everybody should have, but you don't buy it. If you look at that expense account and you say, yes, we could use a new four-wheel drive Jeep on the construction sites, you don't buy it. When you look at the expense account and you say, I've got to pay bills twice a month, and I want to get to the place where I can do it out of my expense account, it forces you into frugality. So that's what we want to do. Okay. What else we got here? I love finding ways to make this business more profitable and easier and more fun. Isn't it fun now to know that when you're paying expenses, it's free money? Hey, look at this. Not even my money. Utilities, $350. Hey, not even my money. No problem. That's the way business is supposed to be. Now, is that cool or what?
Thanks for listening to the New Flat Rate Podcast. I hope you got some great takeaways to put in your toolkit this week. If you'd like to learn more about the New Flat Rate or our done-for-you menu pricing system, check us out at tnfr.us. Have a great day.